All right, good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for January 21st, 2023. It's a Saturday night edition, so we're looking at swing trades. We'll start with Chi Wing Chong's RL30, the slope Z scores. And the strength continued, the recovery, the healing continued last week. Finance and materials leading the way. Energy has had the biggest recovery out of these sectors. Tech is still lagging, so we're noticing there's still some opportunities on the long side there. And really, the continued recovery of the market is going to rely on tech taking a leadership position. Microsoft looks like it's making some gains relative to Apple. But right now, the tech lagging is the biggest worry about the improvement in SPY. In the conservative versus aggressive, we compare the slope stat on XLY, which is consumer discretionary, and XLP, which is consumer staples. This is also a little bit troubling here as staples are not following through. Now, staples have been the stronger sector throughout this period from October through the middle of January, and now this is a rotation back into discretionary. But you'd still like to see XLP doing well in support of SPY. Like you need things like Walmart and Coke and McDonald's and some of the pharmaceuticals to help here, but they're not. And so the rotation to XLY is good in one sense, that there's some aggressiveness coming back into the market for the growth, but you'd like to see staples doing a little better. So still a sideways market, and we will keep that in mind. We'll take a look at a couple here from Charles. Here's Merck. So we looked at Merck last week, too, that it had this nice run up and then a bit of a consolidation here in the last 30 days. He looked at the Z3 pinch, and I believe this is a short that he's taken in Merck. And it's basically scratched right now after an initial reasonable move down. I think that's what I'm seeing. I wouldn't stay in this one much longer, though, because if this holds, it's going to be back in this channel up to 114, and I'm concerned about, Merck has been so strong that there's a good chance this will be seen as failure to fail, and that recovery on Friday was pretty good. So if that's a short from here, I wouldn't let this get above 112. I think I see his stop here. He's given it that little fraction, so and so if we do see some weakness, that will get back in the money pretty quick. And the fact that there was some weakness on Thursday says there may be some downside to it. But yeah, I wouldn't stick around any longer than that. I'd still keep that one. That looks good. In the Russell, he's looking at some long side continuation here using the daily low as the stop, and he's looking to add a position here. I'm sorry. He's looking to add the position on the breakout above the dragon. I think if you were an intraday trader, you should think about getting long to capture that move. That's a $3 move. That's 1.5%. And if you're trading to 3 minutes, you can certainly make that trade. And then if it breaks through 188, you could convert it to a 30-minute trade where you're using that as the entry for the swing with a wider stop. And then monitor the 30-minute trade for a couple days, and if that works, then shift back to the daily. Really, you need to see this get above 187.50, which is this entry here, to be really sanguine that this thing could go. And if it gets above 187, as you see on the weekly, 190 is in range from the weekly, and then that's about 195 as the peak of the RL10 on the weekly. So there's some, and then probably 200. So there's about $14 to the upside available. And if you get that started inside here on the 3 minutes, then convert to the 30, you could manage that risk and ride that all the way up. So I think there's a good shot at that one next week, based on how strong the recovery was on Friday and the fact that we are in early days of this recovery here. We're above the zero line on the hourly MACD, and we just got into the Red River, so we are still feeling oversold, and you got room to go on that one. So I think that's a good frame. Here's some from Dan, a Microsoft. He was looking for the continuation play here. Ideally, on the daily on these, we should be looking for entries somewhere around 237. That would be in this region. Waiting for the R10 to break out. So that worked until it didn't work. And then he takes it. That's a good protective stop right there. And that's the joy and pain of swing trading. This was a critical state, and every reason to believe it could get to here. I still like Microsoft on the upside. Like, I would be watching this one on the it's one of my targets on the 3 minutes. I'm looking to play on the 3 minute chart in this region, and then hold it here if it gets above, what is it, 241? Yeah. But that one was, I think, well planned, well executed. Did what you're supposed to. This was one on United Health. This one has been so bad for so long that a continuation trade to the downside was warranted. It's outside the Z3, so this thing had a great big chance to fail, and playing the breakout of the Z3 is certainly legit. If it doesn't work right away, then the concern is, hey, just a normal reversion to the mean could bring it up here back to the old Z3 and to the Bollinger Band mean. So you don't want to suffer all of that. So after being in the money quick, then the next day opens up in here to just hold, to get out of that over the weekend. This is one here where I like to, if I'm already an R up and the market itself is making a strong move, that's one of those where I don't mind taking an early harvest, especially if I'm an R in hand, and that would be a hybrid trading style. So this one I think is a good exit. There may have been some opportunities in here to make some bank. So, swing trade is inherently trickier than day trading to me. Here's a new frame in Boeing, a 5DD. This one has been so good for so long that this now feels like a routine pullback of people who are cashing the gains while they can in here. And then that sets up the 5DD. for further failure or stop and reverse. So I like this one. I like getting long on this one right away because as long as we're monkeying around with Ukraine, bowing on a dip is about as safe as you can get. So I like that one a lot as an intraday, especially. I'd start that one off on 3 minutes, to be honest. Here's an open trade in Bitcoin. He's still got working. There was some COD at twos, and then when this didn't fail, and the Z3 pinched, and then it broke out of the Z3, he gets long with a stop on the far side of Z3, and that holds nicely. And now the follow through has come in. He's raised his stop to 2190 to lock in the R. And then I would be ready intraday on this one. Crypto had a pretty strong week and a very strong finish. Both Bitcoin and Ethereum were very strong. So if you were ever going to be a day trader, this would be a one to use this as the core position, and then hybrid. So I think you're well started there. Let's see. I think that's all those. Let's go to the. We'll go to the swing portfolio here. So I'm looking now on my little standard set of 10 or so symbols, and I'm looking at 30 minutes because I really am using that as the hybrid time frame between pure intraday trading and pure swing trading. I like to use the 30-minute to get well started, and then if it's still working 2 or 3 days later, shift it over to the daily for management. And if it's one of my standard symbols, like you see someone here like U.S. Steel and Cliff and Tesla, I like trading the 3 minutes, and then if it is really starting to work and I want to think about a swing, I'll shift up to the 30, and then if it keeps going, up to the daily. So kind of a stepwise approach. You can see that one here in Ethereum where we had this trade that started well, exited, consolidated, PSAR flip, and then Thursday on the breakout with a stop below that 30-minute support level, and that closed well. And then Friday has just continued, exceeded the previous high, made a new 10-day high, and is threatening to keep going. That's pretty good. So I actually really like the combination of the exit to preserve, and then on failure to fail, to put that position back on, and the fact that it closed well is why I feel pretty good about the Bitcoin swing that Dan showed is in pretty similar conditions. So that the fact that this is above here and getting ready to go, and I've got a nice buffer in. So what I'm going to do is, where's my stop right now is at 717. I'm at least going to move that up to, I think, like 8, and that still gives me 50 cents of a buffer inside here. So there's about 50 cents of buffer, and then if that resumes, then I intraday would end up, I'll try to lock in that piece, and then leave it alone and let it grow for the rest of the day, and then see if we keep adding to it. So I'd like to get this initial risk position off the table by moving my stop up into here. So we'll do that on Monday. Tesla is in kind of the same position from Thursday. Again, we enjoyed that move. Oh no, I'm sorry, that's Ethereum still. Thought I hit Tesla. So Tesla was an entry back here on the 17th after this failure to fail. Uh, it ran up here, pulled back, and is now closing well. This is that no lose for and dinner for two wedge. Um, and I think I'm just going to leave. No, am I going to leave it there? We're 4 days into this thing. This should go next week. My hypothesis is that the strong finish this week should lead to some enthusiasm on Monday. So, not knowing if that enthusiasm is going to continue and we're sideways normal, I do want to increase my capture here. So, if this starts going, uh, actually, I think I'm just going to move my stop up to about 131, and then if there is enthusiasm, dang it, come on, if it does get above this peak, then that'll be a sign that it's working, and I would look to add intraday to here, and then I would move my stop up to here as quickly as I could on the swing, and then lock in all of that. So what I'm doing is moving my stop from here to about 131 and ready to accelerate into Tesla's rebound. Clean energy is next. So clean energy was one where we enjoyed the swing on the long side from oversold conditions. It peaked, gapped down, and cashed us out. We stopped in reverse, and then Thursday it closed here. Friday it PSAR flipped and started going. So I just decided to get out of that short and lock in that gain from here to here. So we're flat on this one, and this almost feels like a critical state. Neither there's enough room to trade that in both directions. So PBW is one of my prime intraday little turbo traders. So I'm going to be trading this one from this little breakout, like a breakout box above 44 or below 43.50, something like that. And I will treat this as a critical state ready to go in either direction. And I like about that's 45 to 44. That's about $1 stop. So I'll straddle that with $1 and let it go either way. So this is a case where, it got well started on the 30-minute, and then it didn't follow through. So I didn't want to stick around and believe in it in the early days, so captured that wedge. Cliff, we're just stalking it right now. That's always one that I start on the 3-minute. This is one where the 3-minute trade got into the money fast and just ran up. And then notice how it starts stalling, that looks much different than that kind of a move. And so we were just following the move up. And then the gap down sell-off on Thursday, cash the position, and now get to a zero state. And now I'll wait and trade this intraday on the 3-minute charts. And then if it starts making a strong move in either direction, then I'll look to turn that into a tentative swing, shifting back to the 30s. And what I'll do on this is just notice that any price below 2010 is the signal for me that I should be short on the 30-minute. So if it starts moving south, I'm a day trader exclusively till about 2010, and then that's where I would start picking up this hybrid swing. By the same token, where I'm a long side swing trader is above 2120. It's got to break above those. So I'm a day trader up into here, and then I would look to convert a portion of that to a swing trade there. So again, this is part of that 330 daily progression. Okay. I take the same position that a guy in a greenhouse is doing them. You know, I've got a nice greenhouse and I'm just planting a lot of seeds. You know, and the ones that are successful early get transplanted to rows and with scaffolding on the 30 minute, and then those can be ones that we harvest much later. So I like to venture a lot of things quick, take the successful ones and let them grow, and then transplant them to long term. U.S. Steel is a similar to Cliff in that we enjoyed. Like here's one. It doesn't follow through right away, so it just captured the little wedge. Leave it alone. It wasn't until it broke above this RL30 here that we got interested in it as a 30-minute swing. And then that one slowly gathered steam until this was enough to capture. Now that this support level's in place, I'm ready to get long in here as a day trader only until it breaks above the 10-day. And then this is where I would pick up the swing. So I'll be day trading this one with an idea that if it goes well, I'm ready to convert to a swing pretty soon. But for right now, no swing trade on that one. McDonald's is one that had been very weak, we noticed. This was this breakout led us to the long position, which I was happy about. Then the PSAR flipped, and I had to get out here in order to preserve that little gain. I missed the stop and reverse, and then when this happened, I took that as a potential collapsing dragon with the idea that it could get to here. And it got partially the way down there, and then Friday the reversal happened strong, and and the whole market was strong, so I cashed that short in order to preserve this gain. Didn't get the rest of this, but now I really see that as a reasonable long side move. You know, that's a move from 268.50 to 275, so that's an $8 potential gain. So if I can manage half of that with a $4 stop, 268 to 262, I mean, I think the stop could be here. So that's about $1 of risk. I'm ready to trade that one on the long side, simply because this feels like an overreaction on a stock that everybody has to open. This is part of the reason that XLP was doing so poorly, is that things like Coke and McDonald's and Walmart all have been getting smashed lately. And if you're a fund owner, don't you have to own those at some point? Yeah. So I like capturing the little gain. If I was a better human, I could have made that play. But it's not one of my prime 3-minute ones. But I actually like this recovery, so I'm ready to get long here as soon as it starts going up, and then try to, with the 3-minute charts, try to lock in a little wedge, and then let this grow for a couple days on the 30-minute. It's not really comfortable until it gets above 275, but I don't want to wait to 275 to get long, because that's an $8 gain. That's a 3 or 4% move, and I think that if there's a good shot it can get through here, and then if the market is cooperating, that could be a really nice long-term swing. I'm going to step out of this a little bit and look longer term. Yeah, I mean, let's see. $30-day high at 280. So this nice little recovery right here, if I can get long right here, I got the daily PSAR in my favor. I've really just got to get above 271 to make that a emerging dragon. This is already kind of a Kata 2 entry right here. So I'm a day trader into 271, and then a swing trader up to 280, and then a double swing trader or position trader if it gets above this peak, because that'll feel pretty good. And then long term, McDonald. Yeah, you know, long term, this only feels like a temporary blip. So if we can get long inside here, and then it gets above 280, that thing is free and clear. And then you would expect something like this, that kind of a move. Strong support. If it bounces from here, it's turning what was once resistance into support, and you get a chance to buy this on sale down in here. I like McDonald's for the longer term there. Yeah. All right, here's Mexico. This always starts for me as a intraday, and this is why we love Mexico. That when that thing starts swinging, man, it just goes. I should have been on this one. On the intraday, but we are now poised right at this really important swing high. So I can put that kind of a risk box on it and be ready to be long and strong there. And intraday, I can trade it down to here. I love this as the intraday move to here, and then swing trade short from here, and swing trade long from a breakout above 57.10. That has a real chance to go. Yeah, that's ready to rock. That's one I missed right there. I should have had that. This was the this is the residential real estate, and this was a short that stopped and reversed here. Got a nice swing move, captured a nice piece, observed it, and then on the intraday on Friday, this was so strong that just went ahead and got it. My stop is here. I will add a position if it gets above 90.75. I think this has a real good chance to move to there, and I'm content. I think what I probably need to do, because I like this position so much, is to counteract the fact that I like it and move my stop from here to 88.75 and just lock in this wedge, and then give it this much room to play with. And then I should consider adding another position intraday here and another position here, and really build a strong move. Because if this, what I'm worried about is if that really acts as a resistance, then this move could fail fast. So to add a position here means I really have to be day trading that. If I don't want to day trade it, I'll just wait till it gets up here to add a position, and then trail with about $1. Use that, implement $1 trailing stop all the way up, and then I should be good. That probably makes more sense. Just turn that into $1 trailing stop. Devon Energy is the energy's, we knew from last week that energy was recovering faster than the other sectors, and we enjoyed that move. And then the sell-off, and then the PSAR flip got well started on Thursday, continued on Friday. Still looks promising because it's right at the top of this resistance. And if it continues that way, I will be intraday trading that hard, and my stop has got to go from here to the PSAR. And I will use the PSAR now. The 30-minute PSAR is the exit on this position, and then I will turbo day trade that thing on the 3 minutes above 64.80. The marijuana short from here is still in great shape. I mean, it recovered to here and then pulled back, but I got a good buffer inside here. I'm going to move my stop to lock in that wedge. Let me put it in green. So I want to make bank to lock that piece in by putting my stop at 692. And then if this fails below 678, I'll add another swing position because this thing has been horrible. Yeah. So I'm ready to pile on that short. That's a little easier to see here. So if that fails, add another position aiming for 650. Lock in that move to 692. Yeah. And right now I'm only interested on the short side on that one. Because this little support is well below this, and there was not much follow through here at all. So this all feels down. This is Brazil. So we had this nice recovery trade. Tried it long, scratched, stopped and reversed, scratched. And so we're just stalking this one now. This will start off as an intraday trade. This is one of those frog champions. And intraday, I will take this breakout as a day trade first. I'm interested on a short swing if it gets below 28.70. That becomes a swing tradable. And then as a swing trade, not until it gets above 30.20. It's got to get above that. So I'm a day trader in this space, and then swing trader below here and above there. Okay. Treasuries. This is one we were looking for market meltdown on Friday, and we wanted a position that would work, and that's why we took this one on Wednesday. And then Friday, the market started going up, and therefore treasuries go down. So we cashed that one right after it started failing here. And now treasuries have just stabilized right here. That's really going to be a reaction to what the market does. If the market goes up big, I would expect this to fail. And then I'm really looking to restart a long swing if it pulls back to this support level. So if the market does well Monday and Tuesday, wouldn't be surprised to see treasuries come to here. And then if we saw profit taking in the S&P and treasuries were down here, then I'd be looking to swing between 103 and 108. But meanwhile, this was a swing that didn't work. The follow through to the upside to the market made that one take the 1 hour loss. All right, so that's the swing portfolio review. As you can see, it's a little trickier than just basic day trading because there's some shifting in time frames that we do that we're not doing intraday. The intraday we're looking to execute off our primary time frame. But that 3 minute does sort of help support the 30 minute. All right, that's everything I got. We'll get this published and posted. Thanks for your kind attention. Go Chiefs.